Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, September 24, 2014. Here's what we've got. This is a daily chart of the SPY. Thanks for tuning in, by the way. He had a nice update today, and it was not an unexpected bounce. I said that we were coming close to a level that we would bounce. I said that in yesterday's video for a number of reasons. One being the level we were at was the 50-period moving average, and I said that might not be a strong level of support, but it was a level of support nonetheless. And, a couple other things at work here. So let's draw in a Fibonacci retracement again. I showed you that last night, and let's do it one more time. Okay. So you came into the 382. Now I said because we consolidated along this, not far away from this 382 over here, that this may not act as a strong level of support, and I thought we would go down to the 618, and I still think we will, but we're getting, and here's the second point, we're getting into the Rosh Hashanah bounce. Now it might sound crazy, but it is a new year, okay, and nevertheless, if you go back in time, not each and every year, but many, many years, the market will rally around the Rosh Hashanah holiday, whether it starts like a day like today where the holiday starts tonight, or whether it starts tomorrow on the first full day of the holiday. Either way, that tends to happen, and I would expect somewhat of maybe even just a pause or slightly up day tomorrow. I'm not sure we'll get a strong update, but you never know. And then Friday, I would expect something similar, maybe a flat to slightly up day leading into the weekend. And then next week, I would look for some more downside selling pressure. And it gets a little touchy because we get to the end of the quarter. So one side of me wants to say, well, they'll probably push the market up into the end of the quarter. And the other side of me says that the market's more likely to sell off after Rosh Hashanah. So we'll see. We'll play it by ear. We'll see what Friday brings and what the market looks like and what the pattern is at the time, and then we'll make a determination on what we think is going to happen. So that's my take on the S&P. Not a lot's changed from yesterday, only we hit this 382. In fact, the market opened up, meaning opened this morning. Let's see. Let's go to a wrong chart. Let's go to... That's not what I'm looking for. I'm in the wrong space. Forgive me. A 10-minute chart. So the market opened up, right here, 9:30 this morning, opened up, went down slightly, and what did it go down into? Let's go back to the daily chart, okay? Went down right into the 382 at 197.59.8. So we'll call it 197.60. What's the low today? The low is 197.52. So we pierced it by less than 8 cents, and then we bounced up and continued higher for the rest of the day. So the numbers do work, folks. So mathematics rules the market. Okay, that's a fact. There's a lot of ways to calculate different formulas and different ways the market moves with velocity, and there's time factors, and there's tons of ways to analyze the market, and whatever works for the individual analyst is what works. Okay, but I'm telling you that I would say 75% of what I do has to do with mathematics. And that's where I come up with these levels. They're not hard to come up with. It's just you got to use the math and the attributes that are available to us with the chart patterns. And you see when price comes into a certain level and a certain pattern applies, and a certain time factor applies, or certain time period or length of time, these things line up, and you can just, if you've been doing it long enough, you can see what the market's supposed to do. Now it doesn't do it every time, but when it's supposed to do it, the probabilities are in your favor, and you're able to take trades based on probabilities, not based on what you think should happen. Okay, we don't impress our will upon the market. We let the market tell us what to do. All right, let's move on. Let's go over to the gold market. And by the way, Gold is down. This is in the aftermarket. This is Wednesday evening, about a little after 9 o'clock, and gold is down below 1214 on the futures contract. And I'll have you know that's a critical level. So just something to note. Doesn't mean anything right now, and it certainly doesn't mean anything if you're in a GLD or some other vehicle trade that's only open during market hours. But what I would like to say on gold is I think there's a rally ahead of us, but it's going to be short and swift, I think, if we get it at all. And then I think there's lower prices ahead. And that's basically all I'm going to say on gold. I'm not going to give you the levels right now. I might have mentioned them last night, and if I did, that's fine. But that's what I'm looking for. But if we don't get that rally, and here's the other thing. So if we don't get that rally in gold, okay, let's go over to the weekly chart, and I want to show you something. Actually, I want to show you something different, okay? I want to show you the monthly chart, okay, because this is setting up to do one of two things, okay? We're either going to either not reach, make a higher low, or come into and bounce off of this double bottom area, okay? This would make a triple bottom. 1, 2, 3. Okay, this is a monthly chart. This is a very long-term chart. All right, this just on the screen here goes back to 2006, so it goes back 8 years on the screen. I can obviously go back longer. This is as long as GLD has been trading. This is 2005. Doesn't mean anything. Okay, so let's go back and take a look. So this is what I want to mention. Okay, if this doesn't hold, if this bottom here doesn't hold, and this is a good stop out point. If you're long gold and you break this on a, well, this would be on a monthly basis. So for example, if September into next week closed below this level right here, okay, you're out. You have to run for the hills. In fact, you have to reverse the trade because you're looking at this level here, okay, 97, 98. And I don't know whether that happens in a week, a month, or 3 months, or what have you. There's stops along the way. Okay, you know, 110 will be a stop, 103, 102 will be a stop, and you know, it's just lower prices are ahead. I haven't done the exact work on the downside, but on the GLD. But what I have done is on the price of the gold futures contract. If gold did break this low, okay, the first meaningful stop is, and nobody wants to hear this, I get it, 1130, 1135, 1140. Okay, that's almost $100 down. It's $85 down from where we are now. That's a big move in gold, folks. Nobody wants to hear that. That's a gold bull. I get it. I'm just reading the charts. I'm using mathematics. Don't shoot me if you're a gold bug. Okay, I just read the charts. I don't care what it is. Okay, I don't care if we're trading gold, ExxonMobil, or Microsoft. It doesn't make any difference. I'm just telling you what I see. All right, let's move on to oil. And oil had a nice bounce today. This is the USO. Let's go to the daily chart. And I want to show you something. I had previously drawn this in earlier today as a trend line. And here's the reason I drew it in. Because this high connects with these highs, which we didn't hit today, but I would think that, and the probabilities are in our favor, that this would act as a good level of resistance around, call it 35.18 to 35.20 on the USO. And if that didn't hold, if we continued up beyond that, then you're looking at 35.43 and then double top at 35.82, 83. And that would be the ultimate upside in my mind, and that would coincide with the 50-period moving average. In fact, I don't think we'd get there, but regardless. And then there's lower prices ahead for oil. So the USO will head lower, and where will the USO go? Well, the first stop in the USO from where we are today is probably this down at 32.5. I'm going to call 32.5 to 33. I'm looking that for a target. And if you want to know the number in crude oil, I'm going to use $85, $86 a barrel as a target for a downside projection in oil. We'll talk more about it as it heads down. We're not there yet. By the way, October. Okay, that's what my work tells me. It's what my cycle tells me. If it doesn't happen, fine. It's just what I'm expecting. And if we see the chart pattern set up to start with another bearish setup going downward. Now, let's say that this goes sideways, okay, for another week, okay, and then it starts down, then I would say game on, and we're probably going down to that level. So that's what my work tells me. Until proven otherwise, that's the analysis I'm going with. Okay, so what do we want to talk about next? I know what we want to talk about next. We're going to go back to gold, and I just want to make mention of something. I mentioned that there's a likely rally at hand, okay, and it could be sharp and swift. But one more piece of evidence, and again, this is not certainly the reason to buy or not buy gold, but what I'm trying to do here is pull on the screen. Trying to pull on the screen a article I clipped. This was just in the Yahoo Finance section today, and it says, "Trader, the biggest threat to gold may be irrational exuberance." Now, it becomes almost like a weekly or bi-weekly basis. I mentioned Dennis Gartman. Now, if you don't know who he is, don't worry about it. But if you know who he is, he's a longtime trader who comes on TV a lot, and he always tells you he's always in the hot trade. Whatever it is, he just bought it last week, and he wrote it up, and now he's telling you he owns it and whatever. So seems to do that a lot. But here's the interesting thing. He's always wrong in gold. And last time he said he was calling a top in gold and we bought it, or he was calling a bottom in gold and we sold it. I don't even remember what it was, but here it comes again. Whatever it was, we did the opposite and made money. But here's the other thing. Okay, right now he's saying gold is headed down. There's no reason to buy gold. There's no reason to even short gold. There's better shorts out there. He's just discarding it. Okay, and when he discards it, I want to pay attention. Now, I'm not saying that's the reason I'm buying or not buying gold. I'm just saying it just seems ironic that I always seem to be in a trade when Gartman's going the other way, or has just went the other way, or is talking about going the other way. And we'll see what happens this time, but that kind of makes me a little bit comfortable. We'll see what happens. Nevertheless, look for that double bottom in gold, and don't let it go against you. Okay, just move aside if it goes below that triple bottom. All right, I think I'm going to leave it there tonight, folks. I'm David Frost, mystrategicforecast.com. I hope you're enjoying these videos. Thanks for tuning in, folks. Common sense market analysis.